we're asking to make this gathering a successful one for us. I mean, so briefly, I'm going to introduce our lecturer, and then I'm going to read a short biography of our lecturer. Yeah, so today's session, our topic will be structuring Islamic cooperative products, Murabaha. We'll be talking about Murabaha, and to do that for us will be no other person than Mr. Taufik Okay. I hope I'm correct with the name Okay. Is it Okay or okay? But I think it should be Okay. Now, Mr. Taufik Okay uh, is a Web3 startup fintech for he work with Web3 startups, fintech founders, and Islamic financial institutions to align products, narrative, and growth strategies with Islamic principles. And he focuses on helping emerging and regulated businesses communicate clearly, ethically, and credibly in fast evolving digital and financial ecosystem. As a certified Sharia advisor with over 5 years of experience and deep expertise in fiqh al-muamalat, Web3 infrastructure, halal investing, and cryptocurrency, he also supports crypto and fintech organizations through Sharia compliant content, ethical positioning, and fatwa aligned advisory input. Mr. Oke also empowers startups and existing organizations in other industry to transform their businesses operations into more ethical and Sharia compliant ones. He is a specialist in translating complex compliance, technical and financial concepts into clear, trusted narratives that build market confidence, support adoption, and withstand regulatory scrutiny. So, beyond advisory and writing, he partners closely with founders, product teams, and researchers to bridge compliance with innovation, ensuring that technological advancement remains transparent, inclusive, and commercially viable. So that is a short biography about Mr. Taufik. Okay, and I hope every one of us here we are looking forward to listening to gain from his wealth of experience. So let me ask, if we're excited, can we drop an emoji? Can we all drop an emoji? Hello, can you hear me? Hello, can anyone hear me?
Yes, yes, we can.
Yes, we can hear you
Yes,
loud and clear.
Yes, we can hear you.
yeah. So if we are excited for this session, can we please drop emoji so that I will all know we are following. Okay, okay. So without wasting much of our time, I'm going to invite. I'll pass the mic to Mr. Taufik, okay, to discuss with us our topic for today, Muraba. Muraba. I won't be the one. I would have loved to tell us what Muraba is, but unfortunately, I'm not today's lecturer, and the lecturer will do that for us. Sir, Mr. Taufik, over to you, sir. Yeah. Sorry everyone. I think there is a little network uh, glitches from his end. So while we are waiting for him to get back, yeah, I'll call on the CEO of Alco to briefly introduce and tell us what we do here at Alco. Then introduce alcohol to us and the importance of this particular surface session. I'll call on Sadiq Idu, who happens to be the co-founder of Alcohol Digital Technology. Okay, Madam Jibril, sir.
Yeah, assalamu alaikum to wabarakatuh.
Walaikum
Uh,
salam.
Sorry, it looks like some of our speakers are having issues with the network. So, in summary, uh, so I'll just give us a brief about what ALCO itself is. Uh, ALCO Digital Technology is out there to just make ethical finance itself easy and accessible to uh, people who care about ethical finance in general. So, starting from, we have different solutions that we're trying to bring to the market that will make that easy, starting from cooperatives and other solutions in the pipeline, like ensuring that people also are able to invest in stock markets or, capital markets that in companies that align with their uh, ethical values. So, basically, that's just what ALCO itself is, just creating solutions that would make ethical financing easy for every Muslim. So that's just a summary for this. And that's where we have things like SAFIR to also educate us about some of these things from time to time also.
Yeah, thank you, Madam Jibril, sir. That's what we do at Alco, and some of our products we have toys, and we have a product uh, for cooperatives that will soon be launched very soon. Now, our facilitator is on the call now, and we want to welcome him on board while I pass the mic to him. Mr. Taufik, okay, we have read your citation, and then it is time to deliver the lecture.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh.
Alhamdulillah wa salatu wa salam ala rasulillah wa alihi wa sahbihi wa man walahu wa ba'd. We give thanks to Almighty Allah who has gathered us here. The topic of discussion is one of the fundamental aspect of Islamic finance, the modern Islamic finance. And fact that there are many misconceptions surrounding it necessitate having discussions like this. And it is not supposed to be once. It is something we are supposed to be circling, bringing it up every now and then, trying to fine tune it and make it more scalable for people around. So I want to appreciate the facilitators and also the audience. It takes extra interest to say you want to learn some things like this. There are many conceptions surrounding Murabaha and some other Islamic finance products, but the problem we're having is that some people are not even willing to learn. So the challenges before was that though we are still having shortage of experts as far as Islamic finance is concerned, but some people still have the opportunity of going to people who they know are specialists, but they don't want to go because they have an interest to protect and they want to continue dwelling on their propaganda. So that is just it. Inshallah, we are going to be diving deep into some Murabaha workflow, the institutional framework. But before we start, I want to give us some fundamental mukaddimat, like some introductions, some basic facts about Islamic finance. Islamic finance is over defended and over criticized. And one of its main elements is Murabaha. Murabaha has been deeply criticized. As it is being over criticized, it's also been over defended. But there's a middle point. And that is why we have to always clarify some things to each other as enthusiasts, professionals, and investors who are willing to tell something about Islamic finance, whether a cooperative, microfinance, a bank, or maybe any payments gateway or anything whatsoever. So there are certain brutal truths about Islamic finance, about Murabaha and some other financial instruments that we often defend. And they don't need us to defend them. They just need us to clarify them and to let people understand that these are the constraints we are having. The hands are tied. So we have to just make use of what we have. So the first one is that Murabaha is a debt-based instrument. Debt-based instrument signifies that it creates obligation for the customer. The bank has no input in the customer's development. The bank is not borrowing the customer money. The bank is only doing business with the customer. And this business is not a partnership kind of business. So the whole exposure is on the customer. He bought some things from the bank and is repaying the bank. So it creates debt obligation on the end of the customer. So this has been, criticized over and over again that Islamic banks are mimicking conventional banks because they use some benchmarks like, they base the profit allocation on. And this is not bad. It is not bad to use a benchmark. So they want Islamic finance to tilt toward, or Islamic banks or cooperative or what have you, they want them to tilt on Musharaka and some other instrument. But Musharaka creates another obligation on the bank. And that is what? It exposes bank to risk, substantial risk, in fact, sometimes. So the bank is a financial intermediary. The bank doesn't have money of its own. The bank is using investors' money. People who are interested, they are Muslims, they want to invest their money in Sharia compliant way. So the bank has obligation to safeguard their money without necessarily guaranteeing it. Of course, any guaranteed return on the payment is haram. But at the same time, a fund manager is supposed to also be diligent. He's supposed to protect the interest of the investors without guaranteeing them. So it's different. So, but if you notice, if you take a survey, you see that 90% of Islamic banks' instrument is Murabaha. So this calls for, a redress. It is too much. there is over reliance of what? Of financial institutions, Islamic financial institutions on Murabaha. This is not supposed to be. If we say that we want to minimize or mitigate risk, it doesn't mean that, there is portfolio management and there is asset classification. If you have a portfolio of 5 assets or 10 assets, you can say, okay, I want to put 20% of this asset in a high risk investment. 30% should go to mid risk investment. Why maybe 50% others should go to low risk investment. And that is why we have risk appetite according to investors. So Islamic finance, Islamic banks springing up should make a redress towards this. We should not be over depending on what? On Murabaha. That is number one. Number two is that default risk in Murabaha is often underemphasized. People going into Murabaha product, maybe Islamic bank, maybe microfinance, they don't take important look on default risk, because the risk is brutally asymmetry. I mean, the bank cannot increase the price for a customer delaying to pay. You have to either restructure, liquidate the customer's inventory, or have to drag the customer to the bank to get your money. So Islamic finance, as a Murabaha person, your hands are tied. You cannot enforce. There is a limit to which you can enforce your rights on the customer's delay. You understand? And sometimes customers know this and they exploit it. So you have to know this. So you have to not play with risk management, credit analysis, and some other things, as we are going to delve into it when we start the lecture proper. So you cannot, even if you are charging late payment penalty, it has to go to charity. You can only take anything if you are dragging a customer to the bank. All the expenses you take to take the customer to the bank, that is the only thing you can deduct from the customer's balance. But for the fact that a customer is delaying payment, you cannot reduce anything from it. So make sure your risk management is watertight if you are going into Murabaha. That's number two. Number two is that it is said that Murabaha encourages lazy banking culture, and that is true. So we can deduce that from what I have said before, because you know that you are just buying from a customer, you are just buying from a vendor, you selling to the customer, repeat the process, rinse and repeat, and just sit back and expect the cash flow to enter your account as the customers are paying back their money. So the bank is not under any heavy work, or because no, if you analyze it, Murabaha is serious work, and I'm going to be giving us different case studies based on this. So another thing is that documentation is a very, very important aspect of Murabaha. Just a mistake in documentation can render everything you do impermissible. So another one is that Murabaha has many questions surrounding it, and inshallah we are going to delve into them. I just felt the need to put this in front of us, so that when we are hearing some things from some people, we are not going to be over defensive. We are going to face the truth for what they are. But that doesn't mean Murabaha is not a sufficient or Sharia compliant instrument. It is just that we are over relied on it, and there should be a change. We should be exploiting other instruments that doesn't, put all the exposure on the customer, like Musharaka, venture capital, some other things like that, Istisna, Modoroba, and some other things like that. So now let's go into the class proper now. When we say we want to structure a Murabaha, a Sharia compliance Murabaha, at a digital bank's level, or a digital microfinance, or a digital bank, we have to take some things into cognizance. We want to achieve certain things, mostly 3 or 4 things. Number one, we want something that is Sharia. We want our Murabaha to be Sharia compliant. Sharia compliance means that it is asset backed and ownership driving. It is asset backed and ownership driving. Number two, credit risk controlled. We want to make sure that we put important focus on the credit allocation and some other things like that. And it is also it should also be digitally scalable. That means we should, since we call it a digital bank or a digital cooperative or microfinance, we should be able to automate it. We should have, a workflow that is automated. That will make it scalable. It will reduce our documentation. It will reduce cost, and it will reduce stress. And we are going to understand this as we move on. So, Murabaha, a Sharia compliance Murabaha has 10 phases. These 10 phases are divided between 3 to 4 departments. Between 3 to 4, or let's say 3 to 4 departments, or 5, sha. Number one is the risk department. These are the ones that are going to analyze the creditworthiness of the customer. They're going to verify their claims, their cash flow, and some other things like that. And they're going to make sure that this thing they said they want to buy, they actually need it, or they are using it. It is not that they want to do, round tripping, like buy it, resell, or some will even arrange with their vendors. Once you transfer the money to the vendor in the hope that the bank is acquiring the asset, the vendor is transferring the money to them again. Sometimes the vendor even has a court. So there should be monitoring at every point. So this lies with what? The risk department. So that's number one. Number two, we have operations department. Operations department are going to ensure that there is a seamless workflow between the vendor, the customer, and the bank. And then we have the Sharia department. Sharia department are going to oversee the Sharia aspect of the process. Then we can add the audit or compliance department. The audit department ensures that before and after the Murabaha contract has been concluded, they want to ensure that if there is any oversight, if there is any external auditing from the central bank or external auditors, they want to make sure that the contract is Sharia compliant and follows all the due process it's supposed to follow. So Murabaha now lies between what? 3 to 4 departments. And I hope you understand that. So the first one of these 10 phases or 10 structures. Number one is customer onboarding. Number two is credit and Sharia screening. Number three is asset request. That is WAD, unilateral WAD. So that is unilateral promise. That is WAD. The client, the customer will promise the bank that once they acquire the asset, they're going to buy it. Asset acquisition. Then after the bank acquires the asset, we have possession. The bank must possess the asset, even if it is briefly. Then we have contract. Then we have takaful. Then we have delivery and booking. We have repayment management. We have debt recovery. And we have Sharia governance. These are the 10 phases we are going to go through this session. Now, number one, we have customer onboarding and segmentation. If you are a digital bank or microfinance and you want to roll out a Murabaha product for your customers, the first thing you want to do is that you want to do customer onboarding or segmentation. Banks do it in different ways. Some bank mandate the customers to have opened an account with them, run it for at least 6 months or 1 year to be able to analyze their cash flow before they can advance them Murabaha financing. Some, they don't really care. It can be on the go. Customer open an account with us today, we verify everything, we see that they are capable, and then we advance the Murabaha financing to them. That also goes. But for your own interest, you want to be very sure that this customer, because if someone has an account with you, you definitely know some things about them. You know how they are running their account. You know about their business. Maybe you even assign an account officer to them. So this account officer will have known some things about them. So that gives you a kind of soft landing to know that, oh, who we are partnering with or who we are doing this business with, we already know them. So often you have two types of customers asking for Murabaha from you. You have two type of customers. Number one is civil servants or private workers. We can just say salary earners. Number one is salary earners. Salary earners is divided into two. We can say we have civil servants and we have private workers. So the risk segment or risk allocation or risk analysis of civil servants or salary earners is low. Does that the profit margin is also low. So because a salary earner, you know that you are going to base the repayment on their salary. So maybe cash advance or as the case may be. So what some banks also do is that they say for any customer, civil servant or private worker, they are going to advance any Murabaha financing to must have their salary domicile with them, or they must have their certificate of employment, something they can use to hold against them. We are going to analyze everything. So now I said we have two segments for the customers. We have the salary earners and we have business owners. For business owners, for civil servants, you want to assess them based on where they are working. Is it that these civil servants? Civil servants have a very considerable, what do we call it? Job. What do we call it? Can anyone remind me? Security, like they have a good job security. You understand? Their job is secure to reasonably to reasonable extent. Anyone who is working as a civil servant, unless there is a misconduct or they decide not to work again, it is very rare that you see that a civil servant is sacked. If there is no misconduct. So you know that for a civil servant, their salary will always be what? Will always be constant. So the only thing you are going to now work on is that once this customer, how do we make them bring the account to us so that it is before the salary gets to them that they're going to be paying us? Because if you say that you want to advance a Murabaha financing to a customer, a civil servant, and the account is not domiciled in your own bank or with you, then once they get the salary, they can spend it and just start giving you excuse. So with this, issue of IPPIS, it is very difficult to tell an established civil servant who has an account with another bank to bring the account with you, to bring the accounts to your bank. So these are usually the constraints banks usually face about civil servants. But for salary earners who are private workers, maybe they work with MTN, these are high net worth individuals, or maybe BUA, for example, or Dangote, or they are even private school teachers. They can also benefit. Just that for them, it is easy for them to bring their salary accounts to your bank, number one. Number two is that it is easy for them to negotiate. It is easy for you to negotiate with their employers, to have a contract with their employer, or tell them to bring an undertaking from their employer as their guarantors, so that you know that if there's any issue, they're going to take it up with them, expose them at work. Many people don't want to be exposed at work. So that can be the first point of entry. Then we have business owners. Business owners have cash flows. They are in business. So their risk is high, but the reward is also high. So unlike, salary earners, the risk is low. You are going to always get your money. But the margin is also low. What the kind of Murabaha financing you can give a civil servant or salary earner, you cannot advance it to a business owner. It will be like a peanut. So that is the advantage. But the more the risk, the more the reward. So the business risk now is that the goods will be destroyed, there may be fire, there may be theft, or the customer may not even be forthcoming, be upfront with the bank. They may be hiding, or they may be just intentionally avoiding payment. So that is another one. So we get back to this. Now, once there is segment classification and you have mapped the risk. You now move to the second stage now. Oh, this customer that has come to our bank that needs a Murabaha financing, we have analyzed the segment it belongs to. We have known where it works, since when he has been working there. This can be a form they fill on your website before they can. So that will give you an idea of what the customer is, doing. Maybe their name, their age, their since when they have been working there, some other things like that. Number 2 is credit analysis. A customer that is coming to you that wants you to advance a Murabaha to them, you analyze their credit history. I think there is a site we used when I was in Jai's Bank. I think Credit Bureau or something. We use like 3 different websites like that. So once you input a customer's name on the website, it tells you if they have any pending debt with any bank or any financial institution at all, even if it is an interest-based bank. So the Credit Bureau is kind of a central credit review system. So it's if there is any financial institution whose customers are owing them, the Credit Bureau will pick it. So I don't know if that is still obtainable or not, but of course there will always be a website like Credit Bureau where you can always, so you just integrate them with the company's I don't know, operation or something. So once you, so often a civil servant or salary earner, we really have a pending debt with another institution. But these days, now that digital banks are becoming a thing, we have many fintechs. People borrow money from the comfort of the house. Because before, some 5-10 years ago, when we have Groomy, when we have Zip, Lapo, and some other things like that, the kind of stress people go through to get money from these people, these loan sharks, sometimes usually bore them. So some don't want to go through it. Like, the stress of going to them, bringing a guarantor, the password of the guarantor, and some other thing like that. But now, getting credit from these financial institutions is now very, very easy. People can, in fact, OPay and some other app are going to even be forcing the debt on their customers. They are going to be forcing loan on them to take the loan. So now, that is very, very common. And even a petty trader or an average person that doesn't have a work can usually, borrow money from financial institutions. So you want to take this very, very importantly. You want to make sure this customer you want to advance Murabaha to has no pending loan they are paying. Whether they are civil servants, whether they are private workers, or whether they are even business owners. Some business owners, usually entrepreneurs, usually borrow money from this bank. They want to now use the money they borrow from another bank to pay the first bank. That is how they continue the cycle. So at every point in time, they are owing one bank or one financial institution. So you want to take care of this. So you want to analyze their risk. So for salary earners, for example, better for civil servants, you are going to ask for their employment history. You are going to verify that the money is actually entering their account. You can ask for their pay slip, ask for the last 1 year salary to ascertain that this money is actually entering their account. So for business owners now, you want a kind of, it is not bad if a customer of your institution already has a debt obligation with another bank. As far as they are good, they have a good credit rating, they are paying the cash flow, revenue, operating expenses, and some other things that they are operating with can sufficiently pay the current debt they are owing and still allow them to take another Murabaha financing. There are people like this, they are very diligent, they are very serious. So that shouldn't be a problem. For the fact that a customer has gotten a loan or a financing from another bank doesn't mean that you cannot advance Murabaha to them. Just make sure that they are up and doing. So the only thing you are checking from credit or credit analysis is that, is this person credit worthy? So for salary earners, for example, for business owners, you don't want to advance Murabaha to someone who has a debt to asset ratio of more than 33%. Because that means the business is debt based, is heavily debt financed, and you don't want to advance Murabaha to a business that is heavily debt financed, which means if the push comes to shove, you may have a substantial risk. If there is liquidation now, these people may have more, they may be settled first before the bank is now settled. So you want to take care of that. You want to make sure that for salary earners now, I have mentioned some 2-3 things. You make sure that the salary is verified. They're actually working with this company. You can ask for their maybe employment letter. Then you ask for their pay slip of the last 12 months. You ask them to go, if the account is not domiciled in your bank, you tell them to go to where the account is domiciled to. They print the account statement for the last 12 months. That's number 2. Number 3 is that you also ensure that you don't have any debt obligation. Please, Mr. Misbahudin, please can you mute?
Tí ò ló bẹ̀rẹ̀ lè ké Ògúdà when you dey start water sir.
Assalamu
Please,
alaikum, Mr.
can we
Misbahudeen.
reach out to Mr. Misbahudin?
F1 they wan bring wọn fún wọn sí ọdún.
Okay, so I've mentioned 3 things now for salary earners. Now let's go back to business owners. Now for business owners, you want to be sure that I said the business should not be debt based. Number 2 is that it should not, Murabaha is not to fund a startup. You are not funding a business that has not tested the water itself. Some people they just have an idea, or they see people doing the business. Oh, pure water business. Oh, fish farming. Oh, this and that. They see everything on paper. They think, oh, I should go for this, but they don't have money. But now they want to get Murabaha from the bank to finance the business. This is a disaster in Ari. You understand? And this is where the risk management department of the bank should do their due diligence. You must be sure that the bank, the customer, the entrepreneur has been doing this business for at least 2-3 years. Or 1 year. That is when you'll be able to get their cash flow. That is where you tell them to do cash flow analysis and you see what money is being allocated where. How is the fund being managed? What is the return on capital investment? What is the return on asset? What is the return on equity? These are some of the things you make sure you verify. And you also check if they are up and doing in any of these credit bureau websites. If they have a loan, they are doing well with, there's no problem. So for the fact that a customer has taken an interest-based loan, which is prohibited, doesn't mean that the bank cannot do a profitable business and Sharia compliant business with. Even if a Christian comes from Murabaha, you can advance to them once they also fulfill what these requirements. So for business owners, you want to tell them to do cash flow analysis. Cash flow analysis will tell you how the capital is being managed, what working capital do they have already. So also, you don't want, for someone who has started maybe 2-3 years, they may have cash flow problem. Maybe the money is usually tied with some of their customers. So they can't, there is no effective cash flow management. So ordinarily or normally, if you are financing a business owner, the bank should ordinarily not contribute more than 40% to the person's working capital through inventory or purchase of equipment or diversification. So some customers, the operating expenses or operating cash flow is like 2 million, and they want to borrow 5 million from the bank. That is more than 200% of their operating capital. They will be exposed. And if there is any issue, the bank has so much to bear from this issue. Because if there is any problem and they have to sell everything now, they may not be able to realize up to 1/3 of the bank's money. So you want to be sure it is through cash flow analysis that you will know the operating cash flow of a particular customer. So you know that, oh, this customer now, your operating cash flow is 2 million. You are asking the bank for 5 million. No, you cannot extend more than 5 million, more than 1 million to you. So the bank should not extend more than 50%, at most to a customer. More than 50% of what? Of their operating expenses, of their operating cash flow. So this will help the bank what? Mitigate unnecessary exposure. So moving on to that, we now go to asset request. The customer has come now. Now, let's say the customer fulfilled all these requirements we have mentioned before, and now the customer has now applied formally to the bank now that they want a Murabaha. Okay. If the person is a salary earner, you know you're not giving them money. You are buying something for them, maybe equipment, maybe house equipment, maybe automobile, maybe to build house. Auto financing. Auto financing is maybe cars and some other automobile. But maybe if they want to build house, for example, so for salary earners, the bank should not extend more than 33% of a person's salary to them. What am I saying? If a customer comes to the bank, the customer maybe the customer's take home is 90,000 per month. That is maybe, let's say, net now, not gross, net take home. Once they remove everything, tax in Google Kani, what they are left with is 90,000. The bank can now say, this 90,000, we cannot extend a facility that is more than what? That is more than 360,000 to you per year, which means you cannot deduct more than 30,000 from the salaries, from the person's salary per month. Why is this so? It's because you want to mitigate your risk. Some customers, some salary earners are greedy. Once they know that they can get a Murabaha financing from the bank, now they will want to overexpose themselves. They will want to now burden the salary such that once the salary is now coming in, they are not able to remove enough, or some will not even be able to remove anything from the salary. That is what can push some people to theft or stealing or some other things from their company. Because now they have used all their salary to take something. So if you allow them, they can even buy car. This car, maybe they don't need it. It is just a wish, but they cannot afford it yet. But if you expose them to the risk, they will buy it. So it is in the bank's interest to make sure that it does not deduct more than 30% or 33% of the customer salary. You are helping them, even if they don't know. So that the salary, the bank's repayment will also be easy. If you are deducting 33% from a customer's salary, it will be easy for them to pay it. So, for example, now, if your customer's take home is 1.2 million, which means whatever they are going to be getting per year, it should be 400,000, which is 1/3 of their salary, multiplied by 12. That's 4.8 million, which means that is what everything you are going to be advancing to them. It is the cost of the Murabaha with profit marginal, which means if you can now give them a Murabaha finance of what? 4.8 million, which means whatever you're going to be giving them should not be more than 4.5 million. And 300,000 will probably just be the profit of the bank. So that you know that in whatever case, whatever comes, the bank will not deduct more than 400,000 from what? From the customer's account. So this is how the bank can mitigate risk. Trust me, Murabaha is easy on paper, but it is very, very difficult to practice. I was in Jai's Bank in 2021. A special committee has to be brought up to recover the bank's money outside. Personally, I even have a customer I advanced 2 million to that he was not paying then. He hasn't paid. And he's my customer. In fact, at some point, he ran to Lagos. Imagine. So don't treat Murabaha as, oh, they say this thing is cool on paper, it's easy. You will be gambling with what? With investors' fund. And it is not going to be funny. Imagine the kind of resources Jai's Bank has. At some point, they have to, be going to some of the customers' shop. They have to be taking their inventory, selling it, and recovering their money. Now, people are saying now that if you want to go to some of this Islamic bank, they are not going to give you money. They are going to tell you to bring your CFO. If I have CFO, will I come to the bank? You cost it. Because I remember in 2020, 2021, it was very easy to get a Murabaha financing from Jais Bank. I have more than 30 customers that I personally facilitate their Murabaha financing. But people will not pay. People will take banks compliance. They will take it for granted. And the bank now sees that, no, we cannot continue like this. We have to also protect ourselves. So now, whoever is coming to the bank to collect Murabaha should either have a title document or have a high net worth guarantor. So that if there is anything on behalf of the bank, they're going to what? They're going to be able to clear it on the person's behalf. So please don't play with risk management. It is the main pillar holding any Islamic bank you see. In fact, the risk department is aside the Sharia department that have to ensure that what you are doing is halal. They are very, very important. After Sharia department, the next most important department in any Islamic bank is the risk management department, though, because they have to ensure that they are playing it safe. They are playing Murabaha safe. Once people know that you are advancing Murabaha financing to people, they will start rushing, they will start coming. You think that they are really serious. No, they are not serious, though. They want to exploit the bank. So you have to be prepared. Now let's move to we said we have moved to asset request now. If a customer is coming to the bank, oh, halal, or I need a financing, I want to buy Okada. I'm a salary earner. I want to buy Okada, or I want to buy a car, or I want to buy microwave, or I want to buy washing machine for my wife. So the bank is not in the business of procuring washing machine or Okada or car. They want to buy it because the customer requested for it, which is not bad. Some usually criticize Murabaha based on this arrangement. It is not bad. It is allowed Islamically. So what is important is that, are you following the Sharia requirement for this thing? So if you are following the Sharia requirement, you have no problem. Because we have said earlier that the bank is a financial intermediary. The bank is not in the business of what? Buying and selling. It is because of where we find ourselves. Islamic finance. The major banks we have around are conventional banks. We have to have something that is Sharia compliant, that protects us as Muslim. And that is what led to Islamic banks. So Islamic banks, they have to do what is halal. So they have to do what is halal. So now, the first thing is that you want the customer to give the bank a unilateral promise. Unilateral promise means that the bank is not going to promise the customer. So bilateral promises, you promise each other. But the promise has to be what? Has to be unilateral. So unilateral promise that the Halco, we already have an interface on the company's maybe mobile app or all these things we want to automate them. Because that is what can make Murabaha, more scalable. So you are working with, you want the interface to be very seamless, to be intuitive, and to be what? To be easy to engage with. So the customer will probably have a form on the website they can print. Once they print the form, they sign, they can upload it back, and then your risk department will analyze them. So on this letter or on this form, they will tell the bank that they want to purchase. It will start with their request, a formal request to the bank that they want to purchase something. Once the bank receives that, the bank will analyze everything we sell about the customer. The bank doesn't know the customer before. It may even be in the database. Of course, they are not monitoring the customer every day. So it is until a particular customer say they want to request for something, that is when the bank will now search about them. So after the customer request, make a formal request, you now begin your due diligence now. What we have mentioned earlier. Where are they working? Is the salary consistent, and some other things like that. So once they are certified, that is when you now they proceed to making unilateral promise that once the bank acquires the same thing for them, because if they are not certified from the risk management about the request they are making, the bank will not even tell them to make a promise in the first place because we are not even advancing anything to you. You are not even qualified. So it is once they are qualified, that is when the bank will now tell them to proceed to the what? Unilateral promise. Promise to purchase. We call this promise to purchase. Or promise to repurchase. So as the case may be, from what? From the from Halco, for example. So once you move to this, it is part of the things the bank are now going to do is that you are going to verify the asset is halal. The asset they are procuring is halal. This moves to what? The Sharia department. What it is identifiable. It's not something that is confusing or difficult to. It is already existing. It is already what? Existing. And what? It is deliverable. The bank must be able to deliver it. Not something that the bank is not what? Is not able to deliver. So in now we now proceed to sometimes to make it easy, Halcor can integrate some vendors on their website. This will be the approved vendors from Halcor to their customers that, if you want home appliances, you want food stuff and some other things like that, you can check our website, pick from some of our vendors that are close to you. The bank will now pay the vendor. The vendor will now supply to the customer. This is the best because it avoids round tripping. It avoids the customers colluding with their vendor to get cash instead of using what they say they want to use it for. So, but some customers, for whatever reason, maybe they have already built some relationship with these vendors. They have been, patronizing them for 10, 15 years. They want to, of course, get the Murabaha product from them. This is also halal. You don't want to restrict your customers to your own approved vendors. You want to allow them to make their choice. So in that case, the bank has two choices. The bank can formally go to the vendor, assess the vendor. Are they selling this product in truth? Are they trustworthy? So because sometimes if the banks just sit and say, okay, we have appointed our customers as agents of the bank to go and pick what they want to go and inspect what they want to buy from the vendor's office. Sometimes that is how it is easy for the customers to collude with the vendors. But if at every point, at every process, a representative of Halcor, maybe a relationship officer or a risk manager is with them, it will be difficult for them to do that. But it is okay for the bank to appoint the customer as its agent, or the bank can appoint a representative to follow the customer to the agent's place. This is the best because the bank should not be doing anything that we help or encourage the customer to do what is not halal. And these are some of the misconceptions. These are some of the criticism people have against Islamic banks. I remember, I think some of us are on the Islamic Finance Enlightenment Forum. I've once discussed this with a brother from the group who said this is a problem. It is not a problem. It depends on how the banks are structuring these things. Normally, a bank who is in the business of Murabaha is willing to get profit. So they are supposed to be able to facilitate some expenses. They should be able to also spend some things. So some banks try to mitigate some expenses. And that is why some customers, it is easy for them to do some of these things. So the bank should monitor the customer at every point in time to ensure that what they are doing is Sharia compliant. Because it is not only that you want to make your own Murabaha Sharia compliant, you are also helping them on their religion. You don't want to help them to eat haram. So, and it is the responsibility of the bank to do that because you are the one advancing them with the Murabaha. If you don't advance them with Murabaha, maybe they won't eat what is haram. Maybe they won't do what is haram. So if they are now trusting you enough to do something Sharia compliant with you, then you should also go extra mile for them to make sure that what they are doing is what is halal. So the bank should follow them to the vendor's place and ensure that the vendor is certified. They are selling something, this thing they say they are selling. Now, when they are back from the vendor's place, now that is when the normal documentation will now start. So documentation. So after everything has been done, the bank will now acquire the asset. The bank will acquire the asset. Now there are two options to this. The bank can acquire the asset while the asset is still with the vendor, and then the customer will go and pick it. That's number one. Number two is that the bank can take custody of the asset and then transport it to its approved office, and then the customer will now come to the approved office to come and take it. Or the bank can facilitate a logistic workflow that once the bank has procured the asset from the vendor, they are maybe a dispatch rider or logistics of the company, general service of a segment of the company. We facilitate how the goods and service is going to reach the vendor and the customer. It may be in their house, it may be in their office, and some customers will prefer that they want to pick up the asset or commodity from their vendor. All these are allowed. Now, while the bank is procuring the asset, there are certain things that must be ascertained. The invoice of the procurement should be in the bank's name because it is the bank's thing now, not yet the customer's thing. It is after the Murabaha contract has been concluded. That is when it becomes that of the customer. But at the point of procurement by the bank, it is not yet the customer's thing. So sometimes some bank don't pay attention to this. You will see that you check the document, you see that from the point of procurement, the asset is the customer's name. The implication of this in the Sharia balance is that the bank never acquired the asset. It's just pay money. It's just lend the customer money. That is the implication. So the invoice should be in the bank's name. So once the invoice is in the bank's name, if it is also home financing, you want to build a house for the customer, the title document should be in the bank's name. If it is automobile, the document of the car should be in the bank's name. Except for car, sometimes it is not usually easy to change ownership. So what some banks do is that they can procure the car in the name of the customer, but the original document will be with the bank. It's only the photocopy that will be with the customer, and once they are done paying, the bank will transfer the original document to them. So they also do that. So we have done the asset acquisition. So under asset acquisition, so we say some of the things that we are supposed to follow. Another thing we should clarify is that, of course, I think I've mentioned that. I just didn't mention the technical name to it. We have constructive possession and we have fiscal possession. Fiscal possession is for the bank to take the custody of the asset before they transfer it to the bank, to the customer. While the constructive possession is that they buy it, it is still with the vendor, and then the customer go and pick it in the vendor. Sometimes there are certain risks that the bank should take for facilitating a Murabaha for a client. And one of the bank is transportation risk. Sometimes maybe a customer of Halco is in Ilorin and Halco is in Lagos, and they want to transport the goods from Lagos to Ilorin, for example. The transport risk from Lagos to Ilorin is on the bank, not on the customer. It is on the customer take the possession. That is when the goods belongs to them. It becomes their own. So, but the bank can mitigate risk by with insurance. Though it is the customer that will pay for the insurance. We are still going to come to this. So now, from the beginning now, the customer make a request. The bank did its own due diligence, bought the asset. The bank has now transferred the asset to the customer now. Now, the next thing is takaful. That is insurance. Insurance ensures that the inventory of the customer is safe, so that if there's any disaster or unforeseen circumstance, the bank the customer can easily get the goods back from the Islamic insurance company, that's takaful. So the banks should encourage their customers to do this takaful. So it is the customer that will pay for the takaful, while the bank will what? Will supervise it. So once the contract is concluded, you have the customer has taken ownership. Encourage them to do takaful. So takaful is not like the conventional insurance. Any money that is on claim, they're going to get it back. So it is beneficial for them. So let the customers do takaful, and then you supervise it for them. Now another one is that repayment. So for civil servants or salary earners, it is going to be salary deduction. That is the repayment. For business owners, you are going to, maybe some business owner may say they want to pay quarterly. That is every 3 months or every 4 months. Some may say they want to pay biannually. That is every 6 months. Some may say they want to pay monthly. Some may even say they want to pay weekly. So depending on the repayment structure that is easy for the customer, that is what the bank should prefer. So for business owners, the payment is usually flexible. And sometimes the time may not even be lapsed, may have lapsed before the customer. Some customer may just say, I want to even pay all my outstanding balances. So, and then you just close the transaction, because Murabaha financing doesn't end with you advancing the commodity or the asset to the customer. It is until the repayment has been done, the bank has realized its own working capital, its own capital and profit. That is when the contract is closed. So some of the things you are going to do is that you are going to do real-time monitoring of your customers' businesses. You are going to be reaching out to them every now and then. How is the business behaving? You may be even visiting them once in a while. So for salary earners too. So if you have a customer whose salary may not be is not you don't have any assurance, like people who work in a bank, for example. Someone who works in a bank may also want to take Murabaha from another Islamic bank. You understand? Recently, OTD last week, bye. I think today is Sunday. Okay, OTD last week. But on Wednesday, Kuda did mass layoff. You understand? Kuda did mass layoff. I think the last 2 weeks ago, it was First Bank. Now it is Kuda. Because, Kuda has been, it has been acquired by, or it is now being managed by, non-Nigerians. It is the Oyinbos that are now managing Kuda. So they saw a lot of, a lot of misalignment, because I think Kuda promotes their staff like every 6 months. So some people that are now vice president, head of department, have not used more than maybe 4 or 5 years in the banking industry. So the kind of salary they are taking and the kind of role they have, their experience cannot, cater for that role. So that is why, even before they sack them this week, I think in January or December, Kuda did a restructuring. They changed the grade of all their staff. So, but now on Wednesday, they just called a mass general meeting, and they just tell all their staff that they are going to be seeing mail, and they just sack them. And even on Friday, they still sack some people. So, which means it is what? It is a continuous layoff. So just that they gave them severance payments. That is, I think they gave them their salary for the next 6 months. They pay them upfront their salary for the next 6 months. So which is enough for them to take care of any unexpected thing that happened to them. So anything can happen, especially for a private worker. So you want to make sure that the salary is going to be constant, or is going to be consistent. So how you can go with this is that you are going to liaise with their employer. You are going to what? you are going to liaise with the employer. Sometimes you are going to let the employer guarantee you that this person salary is going to be consistent within the time they are going to be paying the bank back. So that is how you can mitigate your exposure. So now recovery framework, there is no matter how you make your Murabaha process watertight, no matter the due diligence you do, there are unforeseen circumstances. There are life problems. There are issues. There are trials. Some are intentional. Some are just as Allah wants it. So, which means you are always going to have some customers that are going to be defaulting. They are not going to pay their Murabaha repayment. They are not going to pay it as and when due. And that is why you have to also, from the beginning, have a working process, proven process about debt recovery, because you are going to be recovering debt no matter how much you try. So the first stage is that soft recovery. This is by reminding your client or customers that they have not paid their payment as they have promised. So you can visit their shop, you can call them on phone, and so on. That is the first layer. That is the soft recovery. The second one is that for someone who has a disaster and it is proven, maybe someone came to a person's place now, one of your customers, the robbers robbed them, took everything in their shop, or they paid for maybe cow. Your customer is in the business of ram and cow, and it is the layer is coming, and they have paid for a trailer of cow from north. Once they get to Bodisadu, for example, the car tumble and then all the cows died. You understand? That of course is going to affect their repayment. So in that case, Allah says, if you have a customer or a debtor that is genuinely at distress, then you have to what? You have to give them respite. You have to give them time for them to be able to pay you. So that is where tenure extension. If the agreement between you and your customer is that they're going to pay for 1 year before, you can extend it to 1 year, 6 months, or 2 years. Or another thing you can do is what? Is you restructure their payment, which means if they are paying, we want to be paying 500,000 per month before, you can tell them to pay 400,000 or 300,000. So of course that will also lead to tenure extension. So,
Assalamu alaikum.
Walaikum salam.
Sorry for the interruption. I have a message for you in your DM. Please, can you please check?
Okay.
Yeah.
I've not seen the message.
Okay. Probably on WhatsApp.
Yeah, I'm on WhatsApp. I've not seen it.
All right, you can continue.
So, where am I? Okay, so that will also lead to payment instruction. Another one is that there are some customers that they don't want to pay. They're intentionally defaulting. These are the ones that you now have to take it up with. So you can talk to a lawyer, you can sue them, you can use the police or civil defense. But you have said that anything that has to be court proceeding, whatever the bank pay, the customer must repay it to them, because it is because of him they have to incur that loss or the expenses. So if in case a customer defaults and the customer dies, for example, the customer dies or something happened, if the asset the bank purchased for the customer is still in the possession of the customer, the bank can take custody of that asset. Maybe, for example, now someone you bought a car for, person has died, he has only paid 2 installments, for example, and died. The bank has the right to take that car, they sell it, and then now you deduct their money, and maybe the rest they can give it to their family. So if there is bankruptcy, or in the event of bankruptcy or death, the bank has the right to take possession of the particular asset or commodity they have purchased for what? For the customer. So that is another point. So we may have a lot of questions. So I want to stop here. Allow us to ask our questions. So because sometimes, maybe things that I didn't touch, and there may be some, applied or practice or other question, so that we want to ask. So I will leave the floor for us now to ask our questions. So I pray Allah in His many mercy make this beneficial. And okay, please let me quickly state this disclaimer. This does not replace a Sharia oversight. So any Islamic financial institution, maybe a cooperative, microfinance, or bank that is willing to start Islamic finance must have its own Sharia board. That is, must have its own compliance team. At least 3 individuals. With at least 3 individuals to start with. So that is the Sharia board. But if they can't, I think that is for a bank, sir. But if it is a microfinance or cooperative, they can have at least one person who is a Sharia expert that are going to employ. So, or will be their consultant, maybe so that they are going to be the one to help them structure all these things. And then if there is also Sharia question along the way, they are going to be able them to answer it. So anyone who is going to start this does not replace a structured or supervised workflow for a Murabaha. So I think that does it now.
Yeah, Jazakumullah khairan. Thank you for that wonderful presentation. I must say that we really enjoyed the session, and we have learned a lot from what you presented. We pray Almighty Allah continue to increase you in knowledge, wisdom, and understanding, and make it a beneficial deed for you in this life and hereafter. All right. We have spent a lot of time, and it is looking as if you should not stop. However, we are going to move to question and answer now. I can see hands are up. Before we move to that, we have a short interlude. We want to present a short video. So our guests and the audience, please, within the next few minutes, the alcohol team will be presenting a short video, after which we'll take our questions. Thank you. You can proceed.
I think you might need to unmute yourself. We can't see anybody.
Yeah. You need to unmute yourself. Adrian. No, I'm not talking about everybody. I'm talking to the presenter.
Introducing a Sharia compliant digital platform built to empower and transform Islamic cooperative Africa. An ethical cooperative banking has a service hub. Today, many Islamic cooperatives still rely on manual methods, paper-based savings, and traditional approval, slowing operation and reducing financial transparency. How helps the bank automate every act of cooperative management, from savings to financing? We need fully finance principles. Alcohol has built an amazing feature for both admins and also members of cooperative. A centralized dashboard for managing members, savings, and financing. Automated reports and analytics for better decision making, which reduce paperwork and improve operational efficiency through real-time payment collection and transfer for admins, which helps with transparency and build trust and accountability. While for members, Halcor has a comprehensive dashboard to track your savings and financing, automate your loan and repayment through direct debit or instant transfer, transparent records of contribution and profit, faster loans approval, and simplified repayment tracking. A secure digital platform rooted in Islamic financial values. At APCO, we help to empower Islamic cooperatives to operate more efficiently, enhance member trust, and achieve sustainable growth, all within a Sharia compliant framework. ALCO is redefining cooperative banking for the digital era. Get started today by contacting us on 070 40233632 or visit www.alco.app.
Okay. Thank you very much for that presentation. So you can reach out to us on those contacts. Yeah, then we go back to our question and answer, and then I can see some hands are up. Let me start from Mr. Akinwola. Mr. Akinwola. Okay.
Salam
Give me
alaikum.
that. All right. Wa alaikum salam.
Salam alaikum. Yeah,
Wa alaikum salam.
I greet everybody in the house. I don't have any question. The problem here is the network here is not good since morning. So I just joined the program about 20 to 30 minutes ago, in which I don't meet the core value of this program. So I don't know. Maybe there is any recorded program for this one. Maybe anybody can send it to me on my WhatsApp number or through my mail.
Okay. Thank you, Mr. Akinwola. This particular session is recorded. The same thing with our previous session. You can check those videos on our YouTube page, Alcohol. Once you search Alcohol on YouTube, you see recorded session. You can get any of our sessions there. Thank you, sir.
Okay.
Now,
You're welcome.
Mr. Misbaudin.
Now, thank you very much. In fact, I really appreciate the organizers of this particular program. So may Allah reward you guys abundantly. I will like and be very happy if the presenter can briefly tell us probably or two, three Sharia compliances as far as this Murabaha is concerned. Because to the best of my own knowledge, experience, and what they call it is that whenever some cooperatives want to do Murabaha with their members, there normally be a certain amount of money in percentage which they normally request to be a how will I put it, a pay down payments. Let's say for instance somebody wants to they want to finance or let me say they want to get an asset worth of 3 million, for instance, probably Marua, bike or some other things like that. They do normally request that, okay, before we go into this financing of a thing, this Moroba of what do they call it, you need to make a 30% of the total amount of the cost of what we are buying for you before we now talk of, okay, well, this is all going to be, this is what is going to be the markup. I don't know whether my question is clear. So with this, is this arrangement Sharia compliance? Because you've been making mention of Sharia compliance, but you've not been able to possibly tell us one or two. So please, this is my own question.
Okay, thank you. Um, I want to believe our lecturer is noting that, and I'm noting it on my end too. So let's have Mr. Omotoshotayo.
No, the question should be answered momentarily. So it should be one
Okay,
after the other.
all right.
I don't understand what the questioner is trying to say. That Sharia compliance, and they don't see anything Sharia compliant. I don't understand. So the question is misplaced. So there are many people practicing Murabaha who are not doing it right. So the fact that someone is not doing it right does not say that that is how everyone is doing it. So if you have any question, you have to ask the question that, oh, is this permissible or not? Aha. So and what the cooperative is doing is not bad. If they want to finance you for something uh that is maybe 1 million, and you have 300,000, that they are financing, that you can add to that 1 million, which means what the bank is doing for you or the cooperative is doing for you is that they want to give you 700. Now you can do this in two ways. If they give you 700 cash to add to your 300 to make 1 million to buy something you are doing, that is loan. That is not Murabaha, which means you are going to pay the 700,000 back, but you are not going to add anything to it. Anything you add on it is interest. But if the bank or cooperative buy something worth 1 million for you on Murabaha and you have 300, once you take the custody of that product and all the documentation has been complete, you can give them 300,000 as your first payment, which means from the 1 million and the profit they are going to charge you, you have already paid 300,000. So some things, it is just how it is structured. It is just what you tell people or how you practice it that make them halal or haram. So these things can be structured in what? In halal way. So, and that is why we always tell any cooperative or microfinance, if you are practicing interest-based cooperative or microfinance, no one will bat any eye. But once you add Islamic to anything you are doing, please make sure you have Sharia experts. Sharia experts, I put them on salary. Let them give you a Sharia compliant structure, workflow of how you are going to be doing your business. And if you already have that, have them in-house so that anything that is wrong, you are going to ask them. Some cooperative or microfinance, it is when they have problem, they will now start running after scholars. That, oh, scholar Lagbaja, my name is Kenikan Kenikan. Some will not even say they have cooperative. They will just call the scholar. And they will not even tell the scholar the whole picture. The scholar will not know the whole picture. But if someone is working for you in-house, they will understand your business. They will know what is at stake. So you will not even be able to lie to them. Some people now, they say they are doing Murabaha. They don't have Sharia experts, they are consulting. Now they will call one scholar now. They will not tell the scholar the whole picture. The scholar will not tell them what you are doing is permissible. And if you now challenge them, they say, we told one scholar, he said what you are doing is permissible. No, you are just being mischievous. You need to have a Sharia scholar in-house for anything you want to do that you are labeling Islamic. I hope I have answered you now.
Yes, thank you, sir. I think that is being answered. We'll move to Mr. Omotoshotayo. You have the floor. Please. Okay. Quite something.
My question is this. Usually in a cooperative, probably in cooperative ESCOs, we'll have agreed at some time that our profit margin on whatever we are selling is 10% or 7.5%. But when we are selling to customer, is it the best? Is it right? Is it Sharia compliance to just tell members that profit margin is 10%? Since we are selling, I'm thinking, is it not supposed to be, we tell the person, this is how much we are selling. After we might have added our own profit margin, just tell the person how much we are selling, then allow negotiation. Or is it not allowed to, in Murabba, for negotiation to come in when dealing with customer? And what is best advice in handling such a situation so that we don't fall into compelling or compressing customer because of their need, to just tell them this is how much you are selling and no room for negotiation?
In Murabaha, there is no room for negotiation. Murabaha is Bay'ul Amana. It is called Bay'ul Amana. to scholars, that is what trust-based transaction. The one you are selling is musawama. Musawama is bargaining transaction. In that musawama, that is bargaining. You don't disclose your purchase price and profit. You just tell the customer, this is what I want to buy. And if the customer is satisfied, they buy it. If they are not satisfied, they don't buy it. But Murabaha, it is a must. You disclose your purchase price and the markup you are adding. You must disclose it to the customer. So in Murabaha, there's no negotiation. Though there is negotiation, if you say, we bought this for you 500,000 and our markup is 100,000, the customer can say, no, I want to pay 6,000. I want to pay 50,000. But what you are negotiating on is on the profit, not on the purchase price. I hope you understand now. So
Yeah,
Murabaha is bay'ul amana. You have to disclose the cost price and your margin. So more often it is not negotiable. In fact, because when I was in a bank, the customers don't negotiate unless you are a high net worth customer. That you are probably, the bank is financing maybe some 500 million or 1 billion Murabaha finance for you. Then they can negotiate. But something that is 500,000, 1 million, because the risk is also high. The bank is not sure if you are going to even complete the payment. We are talking about the next 12 months. So often it is not negotiable. Just that you also make sure that the profit margin is reasonable. It's not beyond what people can pay. If it is beyond, people will not pay. Some might even take it. They will say they accept, but they will not pay it. So make sure it is what. Once you know that it is reasonable, you may not allow negotiation. You are permitted not to allow negotiation. So I hope that is clear.
Nah, alhamdulillah.
No.
No, thank you. Alhamdulillah. And then we take Mr. Adisa, Mr. Lawal. Mr. Lawal, your hand is up.
Warahmatullahi wabarakatuh.
Wa alaikum salam wa barakatuh.
I want to appreciate the presenter of this lecture, and I want to pray for Allah will continue to increase you in knowledge. We are operating a cooperative, and we target an Islamic-based cooperative. And there is a problem that we have within the cooperative, is a staff-based cooperative that is operated in Lasso. So almost every one of us that are managing the cooperative are also staff of the school. So when we need to buy anything for any staff, at first we do go out to search, to buy and bring it down before we sell to the people. But it gets to the time that we have no time again to do that. So what we now operating is that we tell the staff, what do you want to buy? The staff will tell us, go to the person that is selling it. How much does it worth? Let us see. So when it now comes, we sell at a 10% margin. So we now place that margin on it and sell to the member. So I want to know if what we are doing is Sharia compliant or not. Thank you.
Okay, please, I missed some of the things you say.
I said,
okay.
So I said we are operating a staff-based cooperative.
Okay.
And at first, those people that are managing it, we are the staff, and we do go out to buy the substance that our members need.
Okay.
So it now got to the stage that the workload in the office do not allow most of us that are managing that cooperative to go out and buy and bring it in. So the decision now is, if any staff needs anything, like say you need a phone, we tell that staff, go and price the phone from where they are selling it. Let us this the price. So the staff will bring in the price of the phone, and we had our profit margin. We advance the amount to the staff. Go and buy it, and we put our profit margin on it. So we want to know if what we are doing is Sharia compliant, and if it is not, what exactly should we have been doing instead of that?
This will lead me to what I just said earlier. we are just all trying to micromanage, and it is not good. As a staff cooperative, you should have someone within you who is a Sharia advisor, Sharia expert. The way you are doing it is not, we have just said it is not permissible. So you are giving the customer, you are giving the staff members to go and buy it. Once they buy it, you tell them, oh, these are profit, and it's already their own. So there should be a moment of the cooperative acquiring it and then selling it to the customer, and there should be documentation. So there should be documentation. What you are going to do is just get a Sharia expert. If you cannot employ a Sharia expert, you want that you can pay monthly, pay them quarterly, or just pay them per consultation. Let them draft a working process flow for you, a Sharia compliant Murabaha process flow. Let them draft it for you. That is what you follow. Then if there is any issue, you know that you have someone in-house that you can quickly go and run to. That, we have this issue. How can we do this? How can we do that? They are going to advise you based on their own expertise. And let me tell us this, being a scholar is different from being a Sharia expert. Someone that is a scholar may not be able to dissect some Islamic finance issues because of what is involved. So make sure you have someone who specializes in fiqh al-mu'amalat, or has deep experience in Islamic finance. So it is better for you and more cost effective in the long run. Because the problem with this is that this can quickly, go from being Sharia compliant to being haram. So which means, and Allah, the Prophet caused people who take interest, the one who is taking it, the one who is advancing it, the one who is underwriting it, and the witness. So what is supposed to be something that is going to be Sharia compliant will now turn to something that is haram. So please get an in-house Sharia advisor. Let them guide you. And I'm sure they will have some other things to correct. Now.
Thank you.
I have another question, which is in line with the last question, sir.
Now,
the aspect that you help us clear a little bit from your last answer is the opportunity or chance of using a member also as an agent of our cooperative. Please help us to shed more light on that. Can we use our member also as an agent of cooperative? Like the example, is it not possible for us to pay the person just for the member to now be used as an agent to just go and pick it? So we don't pay the member directly, we pay the seller directly just to use them as agent, please. That's my question.
It's not, I think I mentioned this during the class. Being an agent has a limitation. An agent is not a true owner. Agents are delegates anywhere. Agents are delegates. If the cooperative is selling someone that needs the commodity or asset as an agent to go and procure it, there are some things the bank must ensure they don't violate. The first is that they are not going to transfer money to that person. The money is going to be transferred directly to the vendor, the one that is sending the phone, number one. Number two, the receipt is going to be in the cooperative name and not the customer name at first. The receipt is going to be in the bank's name, cooperative name, not the customer's name. That's number two. Number three is that there is going to be ownership transfer. What you do not own, you cannot transfer it. And what ascertain that the cooperative is taking possession is that the invoice will be in their name before they can now transfer it to the customer. So this is also part of what we are saying. If the cooperative, for example, send money to the person because it is their agent, and the person does not buy the phone, that is a lapses. So the cooperative should ensure that they are not creating a kind of a gap or loophole for customers to exploit. Appointing as an agent is not the problem, but do you follow the rules you are meant to follow when you are appointing one of you as the agent or even the customer as the agent? I hope this is clear.
Now, very clear. Jazakumullah khair.
Jazakumullah khairan, Mr. Taufik, for that wonderful presentation. We really enjoyed it, and then we pray Allah subhanahu wa ta'ala to continue to increase in knowledge, wisdom, and understanding.
Sorry, please. So I'm unable to raise my hand up. I couldn't see the icon to raise my hand. Sorry for the interjection. I have a question. Can you hear me?
Yeah, we can hear you, but please make it faster. We're
Okay,
about rounding up.
okay, I understand. In the course of the presentation, the presenter made mention of a certain percentage of the operating cash flow or working capital requirement of a business that should be financed. I want to know for most SME businesses, not even most, all SME businesses, they don't even have the documentation of financials in order to access their working capital. So how best are we going to, what are the criteria or to use in order to arrive at the working capital requirement of such SMEs, since mostly it's just the statement of account that we have access to?
Okay. That is not the bank's work. The bank can either tell them to go and do cash flow analysis. So there are analysts that do cash flow analysis for people. The problem with some of our business owners in Nigeria here is that some of them they don't follow the proper way to do business. They don't have documentation. Some of them cannot even tell their last 3 years income. Some of them don't know their monthly revenue. You understand? So these numbers are very important. There is, no matter how promising a business is, if the bank cannot track the performance on paper, then it is very risky to advance loan to such to advance Murabaha financing to such a person, because it is very, very risky. It is very, very risky. So the bank should ensure that for any customer who comes in for Murabaha, if they don't have a bookkeeping themselves, then the bank should tell them to go and do cash flow analysis. Or the bank can ask them the accounts they use. Maybe they are using 2 or 3 accounts. So usually they have primary accounts and they have secondary accounts. Maybe this is the main bank I'm using for my business. Or sometimes I also use this bank. So you can tell them to print the last 1 year statement of both bank. Then one can analyze it. So that is also another way to go about it, because unless you are going to not be truthful, if you are advancing Murabaha to average people, SMEs, this documentation is going to be difficult. I mean, having all the numbers you need. So most people don't pay attention to the numbers. Some people, as they are having the money, they are spending it, they are making the profit. So I think I've answered your question, Ami. Hello. So I think I answered your question.
Yes, I'm fine.
No.
All right, thank you. Thank you, everyone, for attending. And thank you for your patience. We really appreciate you. The information we have from the alcohol team is that you can get this particular session, you can get it on our YouTube page, alcohol. You can get it on our YouTube page if you want to access it for other information and other sessions too, other SAFIR sessions that have been aired in the past. You can get it there. The link is in the chat box. You can get it from there. And also, this series continues next month. Inshallah, 26th of April 2026 will be our next SAFIR section. And I want you to anticipate the wonderful topic and experienced personnel will be bringing on board as a facilitator. Inshallah, thank you, everyone. I will call on one of our members Uh,
Assalamu alaikum. Assalamu alaikum. Before you go,
Adamin
please.
Ajao.
Assalamu alaikum.
Walaikum salam.
Please, someone is raising hand here, Mr. Latayo, and I especially invited him on this call, and I would like to crave your indulgence to allow him to ask question, please. He's been raising hand since, but he has not been called. Jazakumullahu khair.
Amin wa yakum. I thought we've entertained this question. I'm so sorry for that, Mr. Olatayo. Please, we'll be entertaining your question while that will be the last question. We're very sorry, we are running out of time.
Yeah, thank
and
you
we don't
very
want
much.
to delay. Yes. Mr. Olatayo, you can go ahead. Walaikum salam.
Yeah. Yeah, thank you very much. The question I want to ask is on this issue of buying commodities for customers, like we used to practice in our own cooperative. We don't normally give money to the customer. We'll go probably by one of our agents, or we'll go together with the customer to the point of purchase. We'll negotiate there, then we'll pay. Then after payment, at times when we want to buy, it may demand going out of the community or from the city. I want to ask, the expenses incurred in that regard during that process, who will bear it? Is it cooperative or the customer? Secondly, by the time the preacher was presenting, a discussion on the issue of repayment, that the customer will tell us how it is convenient for him or her to pay. For instance, probably the civil servant probably will pay on monthly basis, then the business owner probably quarterly and the likes. In our own case, we have our agreement is that the money must come in on monthly basis, and we do give a time lag for such commodity. Is this one a Sharia compliance, or we are probably going out of a Sharia contest? That is my question. Assalamu alaikum wa rahmatullahi.
Walaikum salam. Do you have an in-house Sharia advisor or Sharia expert?
Yes, we have.
They should answer this question. So because normally the profit margin is not constant. The cooperative can put profit margin based on the cure they incur. If you know that you are going to incur maybe additional 50,000 for transportation, you have to factor it in the profit. So that's not an issue. So and for the payment, it is better you structure it according to what fits the customer, because if you structure it according to what you want, the customer may not end up paying, and they will not be at fault, because they will say that, oh, they tell you that this is when it's convenient for me to pay, and you didn't allow me to pay then. So some customers, they don't do monthly business. They are doing, some customers now, maybe they order goods from China. Oh, you owe the 3 months, don't you me? After the 3 or 4 months, that is when they are going to sell and realize that you cannot tell them to pay monthly. Some people, they are doing agriculture. It is maybe after 6 months they're going to harvest. You cannot tell them to pay before every month. So each customer has their own business operation. The business operation is what will inform how you are going to structure the customer's payment. Some people who are into FMCG, maybe buying and selling toiletries, maybe soap, maybe toothpaste, those ones can pay monthly. You can even pay weekly. So it is the customer's mode of business that will inform how they are going to pay. And since you have an in-house Sharia advisor, please always engage them. So if you have them, these questions will not be an issue now.
Okay. But what of a situation where probably the person is not probably a business oriented or whatever? Probably the person wants to buy an household items.
Household item. Okay.
Yes.
What business is the person doing? Or are they salary now?
Yes, probably a business, petty traders or salary earners.
And that is why you say you are going to do your due diligence. You know if they are worth what they are asking for, or they are not worth it. Repayment is the least problem of Murabaha structure. Repayment is the least problem. Once you know that the customer is qualified to pay, and it is just to structure the payment based on what is convenient for them. You know they're going to pay. That is constant. But if a customer is not credit worthy, Then whether you structure it according to what they want or what you want, they are still not going to pay in the long run. So the payment is the least of the issue. What you are going to focus on is that, is this customer credit worthy or not? What we are advancing this customer, are they worth it? Can they pay it back? That is what should be the main thing. Now,
Okay. Now, alhamdulillah, jazakumullah.
Amen.
We'll call on Mr. Sadiq to give us the closing remark and closing prayer. Mr. Sadiq, can you hear me?
Yeah, just to confirm, can you hear me?
Yeah, I can hear you.
Okay. I wouldn't take too much of our time. I just want to once again appreciate everyone for taking our time to join this session. And as it's been rightly said earlier, that it's a continuous session. It would come up next month, our monthly SAFIR series. We want to indulge everyone to once again be a part of this conversation. We would ensure that we carefully select our topics and bring professionals who can treat the topic as expected. We also would like to implore us all to check us out on our social platforms, LinkedIn, Instagram, and also on Twitter. And also maybe check back on the session on our YouTube page. So yeah, just again, thank you all for joining. We ask Allah to make this session a beneficial one for us all. Amen.
Yeah, assalamu alaikum. Thank you all for joining. Assalamu alaikum. Have a wonderful time.